Hello everybody, welcome back to the channel. In today's video I'm gonna go over the consumer staples section of my portfolio. In last video I've shared with the technology side of things, so I've shared with you 5 different companies that I own, and in today's video I'm going to share with you 4 of those. Now if you're not familiar with the sectors, okay, the S&P 500 is divided into different sectors. So I'm going to share with you very quickly what these sectors are. So you've got information technology, which is what we looked at in last video. You've got healthcare, you've got financials. So unfortunately for me, financials, it will be difficult to invest because of the Sharia compliance side of things. Then you've got consumer discretionary communication. At the moment, a lot of the companies that are in the communication sector, it's actually Netflix and AT&T and Walt Disney and so on, and because of that some of their products are not Sharia compliant, so I'm staying away from that as well. Then you've got industrials, then you've got consumer staples, energy, utilities and energy seem to be in a lot of debt, especially utilities. Energy, you can find companies like Chevron that are Sharia compliant, and obviously you definitely need to do your research on that as well. Now when it comes to real estate, there are some companies in there that you can actually invest in, but a lot of them deal with mortgages and all that side of things, so you don't want to really get involved. And then material, so at the moment I think I've got 5 or 6 out of the 11. So today's video I'm going to share with you this one here, the consumer staples. Now consumer staples companies provide all the necessities of life, and this is it. This is one of those sectors where we need it right now. If you were to go to the supermarket, whether in the US or the UK or somewhere else around the world, you will definitely pick up some of the products that these companies that I'm going to share with you sell on, basically on those supermarkets. Alright, so first of all, let me show you my portfolio. So this is the consumer staples section. I've got 4 companies. So I've got Kimberly-Clark Corporations, I've got PepsiCo, the company that created Pepsi, Procter Gamble, and then Unilever. So I'm going to share with you just basic information for each one of these things, but if you would like to look into it, please just do your research and find out a bit more about these companies. But I'm going to share with you as much as I can anyway about each one of these companies and tell you why I've invested in it. Okay, so at the moment Kimberly-Clark, I own about 11 shares. Okay, 109, so that's my average cost. At the moment it's down by almost 10%. It's been down, this whole sector as you can see is actually in red because it's been down for almost now 2-3 months since people started, when the pandemic happened initially. Everyone rushed to buy t-shirts, to buy products to make sure basically they've got enough food at home. And then all of a sudden, as soon as we got the vaccine and people realized, okay, we might be going back to normal life, they've just basically start selling these companies. Now one thing I love about these companies is they've been around for a very, very long time, and like I said, some of the products they sell is things that we need and we will definitely need for in the next 10, 15 or 100 years if you like. Okay, and because of that I'm not really worried about the fact that they're down. In fact, I've been adding to it. So I literally bought today 2 shares of Unilever. Today was actually down quite a bit, so I bought 2 more shares of Unilever. I've got 27 shares. So again, the reason I'm doing that is because I'm dollar averaging, and obviously if you look at the dividend income, okay, every single quarter I'm actually collecting enough good money and to reinvest in these companies. So every dividend I get paid, I put it back into these shares. Okay, I've got a basic in the trading 212, which allows you to create a pie. You can automatically reinvest your dividend, and that's what I normally do. Okay, if you like to get a couple of shares for a share basically in trading 212, if you like to open an account, I'll leave the link in below. So use that link, you get a free share, I'll get a free share. So happy days, you can try that and see how it goes. Even though there's a lot of negativity about trading 212 out there because of what happened last 24 hours, just same as Robinhood, where they've actually restricted certain GameStop basically stocks and so on. Because of that, I think a lot of people are now saying bad things about them, but generally commission free for me, that's a basically no-brainer. I'm definitely going to stick with them and see how that goes, inshallah. Okay, so at the moment I'm getting about £19 with Kimberly-Clark for the 11 shares that I own. PepsiCo I own about 10. I'm getting £25. Now again I'm down about 3%. It was up not long ago and then now it's kind of down again. It's not too cheap for me to buy, so I will be at the moment I'm going to wait for maybe another dip to see if I can buy. But Kimberly-Clark I've been adding to it. Initially I had about 7, but now I've made about 11 shares in the last month or so. Okay, so let me very quickly show you overall where it is at the moment. For the year, okay, is about 6% down. And this is one of those companies where, if you look at the products they sell, I'm sure some of these products are in your own household at the moment. If not, you probably would be buying it in the next few weeks or whatever. Okay, in North America, that's where most of their revenue actually comes from, and obviously they is a worldwide company, and is one of those companies that are so diversified. They're not getting their revenue from one single item. They're very, very well diversified. So that's the reason I invest in these companies. So if you want to know, this is the investor presentation. It's got a lot of information. This is where I normally tend to go and see how much they basically made this month, or in this quarter, and find out basically how, in comparison to other companies that are out there, basically how they're doing and so on. So you've got a lot of information in there. If you're really interested, have a look at it. It's called investor presentation. Okay, let's have a look over all the company. So if we look at the valuations at the moment, is undervalued. Okay, really undervalued, so I would definitely be adding to it, inshallah. And then future growth about 5%, not bad. Again, this is not a growth company. This is not a growth company. This is not one of those companies where you expect to all of a sudden go up by 10%, 20% every, you know what I mean? It's not the same. It's one of those companies where you know what you're getting. You're getting about 5% every single year, okay, in and out, and you're getting a very good dividend, about almost 3%, over 3%. Again, that's excellent to see. For me, that's all I need. Okay, company that has so much going for, so many products that are in demand, at the same time paying you a very good dividend, as well as obviously growth of about 5%. So I'm holding on to this one, see how things go. Okay, next one is PepsiCo. And PepsiCo again is one of those companies where you probably have, if you don't have it, you'll probably end up buying it this week. If you go out, you might end up having a Pepsi or Mirinda, whatever. Okay, so they have all these top brands. They've got beverage. Look at that. I'm sure you've seen some of those. Even they actually basically do some stuff. They do create those for Starbucks drinks. I've never had them, but they are there. I'm sure you children might have one of those drinks if you've got any children. Food, you've got all of this. Look at that. Okay, this is stuff that you can, when you go to the shops, we definitely have this. But they've changed the name, haven't they? Right now it's called something else. I can't remember exactly, but they've changed now the name, which is really good to see because it was horrible. Okay, again, everyday nutrition. Okay, so they've got a lot of products. So there's all got, every time you go to the shop, you'll definitely find a product that belongs to this company. Now, their current price is 139 on $192 billion company. Okay, and when you look at their dividend, okay, they pay about $4 for every share that you own. 74% payout ratio of their total, their net income. Again, that's quite high. You probably want about less than 60. Lately, I've been just being picky and just choosing companies that are less than 60%, because you don't want to, the company to spend 70% or more about, of their income, net income. That's not good. Okay, so but they've been paying their dividend, they've been growing their dividend, so again, that's really good to see. And I don't think this will go away anyway. All of a sudden they're not going to stop their dividend. They haven't stopped it over for 48 years. They're not going to do that now. Okay, in terms of valuation, at the moment is undervalued. Future growth about 6%, dividend about 3%, solid. Okay, that's what I like to see. Procter Gamble is the other one. Okay, if you don't know what Procter Gamble, I think I've done a video before, but they're similar. They're house products. They sell, Head and Shoulders and all these products. Okay, their current dividend is about 2.4%. payout of 55%. Again, that's good. 64 years of paying dividend, solid. Let's have a look at where they are valuation wise. Okay, so they are overvalued at the moment, and I've been waiting for a dip for a while now, but this week it's been down a little bit, but not as much as I wanted to. So we'll see how that goes. Future growth about 18%. That is really good. And if you look at their dividend, it's about almost 3%, which is again solid to see them. Okay, the final company is Unilever. Now, the Unilever, I think they're a Dutch company, but they also trade in the UK, so which is great. Now, everything you see in here, they actually own. So let me show you some of their products. You probably know this. You've seen it. You've had it very recently, I'm sure. And they've got loads of products. I can't, every time you go to a shop, you will see products that they actually own. Let me show you the other. So that was food and beverage, if you like. So the other products that they own, including beauty and personal care. Okay, Dove Man Care, for example. Look at this. This is stuff that you normally, when you go to the supermarket, you just pick it up without even thinking about it, because that's what you've been buying for a long time. Okay, and this is one of those companies, again, they're not gonna go busted all of a sudden. What they do is, and every time a new company comes basically in the market, they acquire those companies, they buy them. So again, it's a monopoly, but then again, is working for them. They're doing really well. Valuation at the moment, that's good. Okay, undervalued. So I've been buying, like I said, I've bought 2 shares of this company just today, because it's actually the UK stock is down a little bit today, so which has been really good to buy. Future growth about 5-6%, which is not bad. And then when you look at their dividend, over 3%. Now again, solid. Okay, I know I'm going to hold these companies for a very long time. So this is what I call the base of my portfolio. So what I'm trying to do is I'm building, dividend pay, passive income portfolio. You've got the tech companies that I shared with you last video. If you don't know, I'll share that link again if you haven't seen it. Okay, and on top of that, I've got this. Okay, I've got consumer discretionary, which I will share with you in the next couple of videos, but this is my base of my portfolio. So I'm going to add to them as much as I can whenever I can and get those dividends. So let me just show you the summary again. Okay, so that is basically the total amount that I've put in, total market value, total gains, and then basically it's up at about 21%. Okay, so it hasn't. So at the moment, my annual income for my dividend is about £318. I'm hoping to increase this hopefully to at least 2%, and increase this maybe by the end of this year to at least £600 for the year. So inshallah, we'll see. We've got a long way to go. Now, if you look at this, this is for the 2020. This is how much I've been paid. So 163. Again, I only started around April, March. I think it was around here. Okay, I was using different brokerage at the time, so I had to move over to trading 2 and 2. So I can't exactly remember, but I definitely started in April. I got my first pay, which is amazing, £3. And then if you can imagine, November I'll be being paid £56 for literally buying these companies, holding them, and literally adding to it every time I get an opportunity. Now, this 2021 January, this is how much I've been paid so far. So I will see how that goes, inshallah. Hopefully, if I can get that 300 and then add to it as much as I can. Now, this is the final thing I'm going to share with you, is the short list. So this is what I do. Every time I'm always researching, I'm always trying to find something either to share with you or for the videos or just for myself. And this is exactly what I do. So you might want to start doing something like this if you're really thinking about building a portfolio of solid companies that are, industry leaders, if you like. Okay. And what I do is I put all this information together. So the valuation of the company, the market cap, the sector. Again, at the moment, materials, what I'm focusing on more, healthcare, I'm adding to industrial. I think I'm not so much, but I'll see how that goes. Technology, I've added Visa and MasterCard. I've had them before, sold them because they were too, literally I bought them and they just shoot up. So I thought, you know what, let me take some profit out. Their dividend is not great, but they are solid companies. So inshallah, I'm going to evaluate by looking at this. Okay, any company that's undervalued, when I get opportunity, I will add to any company that's overvalued, like this one here, APD. I'm not going to buy this anytime soon, but it's one of the companies that I want to buy because of them. I am under when it comes to the materials section of my portfolio. All right, let me quickly show you that. So consumers, I've got about consumer discretionary, I've got about 31% on my portfolio, about 10% for healthcare, 30% for technology, 18% is about what I've showed you now. Okay, so 18% of my portfolio is consumer staples. Material, you can see is 0.2, and then industrial is about 10% total. So I am going to add more. Okay, so at the moment I'm doing a research on energy. I don't think I'm going to go down that route. Utilities, I would love to, but a lot of them are really in debt, so I don't really want to. They use debt basically to finance and do all their stuff. Real estate, I know there's one company that I can invest in, so maybe I might add that company, in fact. So hopefully by the time this year finishes, I will have maybe a majority of these sectors apart from finance, because finance is the worst one, because everything to do with banks, I'm not going down that route, definitely. So inshallah, see how it goes. I hope you enjoyed. Okay, the reason I'm doing this is just to be transparent, to show you exactly what I'm investing in. Even though I've talked about before investing in this company, that company, but I just also want to be transparent enough to show you that I'm actually buying this product. And once I finish the cycle, I'm going to show you my trading tool into account, so you can see physically like that I've actually got these stocks and I'm not making up some rubbish on spreadsheet. Okay, I hope you enjoyed that video. Take care everybody. Assalamu Alaikum.